and then bam, just like that. It took 2 days, basically from the widest point of the balance, which is the balance is all the positions that have been realized. The equity is the current positions that haven't been realized, that I've frozen on the spread or that I have currently on, and now it's caught up. So over this last week, I tried following the institutions in their net short position, and that turned out to be a disaster. They were totally wrong. So I decided, after the euro index and the euro USD converged, the divergence disappeared, I decided to go long because they were both in the up direction after a certain point. But there was a point where the euro index was on, I guess, on a dip, breaking down, and the euro USD was going up, and one of them had to be right. So I had to make a judgment call, and the judgment call was to wait until they all started to go the same direction. And then once that happened, I went long, and that was this week, roughly 2 days ago, as you can see by the equity curve. And I got my long forecast model, and the rest is history. We're chugging along, and we're gonna see where it goes from here. We're waiting to hit our target first. I'll just show you the new things that I've been posting on whatever social media. So one thing that's interesting. So this is the forecast for the SP500. Roughly, we'll use this one up here. So this is the harmonic. It's a triple phi. We're currently probably up here, and then the target, according to the the cross section of the two fib spirals, is roughly around 4,780, 4,770, in that range, the weekly resistance. So that's where I'm targeted for my longs, is the previous all-time high, and the idea is that the triple phi will be our guiding light for a target, an early target, and where we'll dump our long positions. And then if we did if then statements with every harmonic previous. So we said if the current harmonic is true and we were to do a new harmonic off of that point as a swing point, where would it be? And the institutions are still really short, and I think they're going to stay short going into this blow-off top style. And I made a new harmonic, a triple phi, and that put us down to 3,900, which is interesting because the S&P 500 also has a 12-hour order block that's naked right there. There's a gap right here, basically. And you can see it from this candle wick low to this candle wick high of the in-between. There's a gap. There's this bullish engulfing candle, and then the candle before it and the candle after it has a high and low that do not connect, and there's no price that touches that area. So for it to go there sounds logical, and if the institutions are short and the retail actually dumps at the top and sells I don't know, whatever it is, but basically we're going to play the range. So whenever we are coming to a breakout at all-time highs, previous all-time highs, we're going to reject the breakout, and then go to 3,900, and the expectation is once it retests that breaker, it'll bounce and made a new harmonic. I think it's a double phi, so it's not as like reliable as the triple and quadruple phi, but we have it going to weekly resistance or previous weekly resistance, and it makes for a really good like head and shoulders type situation or swing failure pattern. Defined risk above the previous all-time high, short at 4,500 roughly, and yeah, and it works with the fib spiral, and then reject, and then go all the way to 3,200. And there is another fib spiral connected here. We go to here, it also connects to here as well. So I don't have that currently up. I've been working on Bitcoin. Let me see. I think I can pull it up. Just gotta maneuver. I gotta set the aspect ratio. And then find the fib spiral responsible for connecting. There it is. Yep, there it is. It was a little off. It was here to here, C to A. But I kind of also want to see what that red one is like. Oh, there's the red one. So the red one is a double phi. I don't know. I could not get a triple phi, which is fine. Like, I have no idea what this harmonic is. Like, I would like to say there's like a 30 to 50% chance for this double phi, but for the triple phi, I think it's over 50% chance. And it all depends upon the harmonic being filled before it. So the more when one of the harmonics fail, the whole model success rate drops dramatically. So like this is why this is more speculative, but because we have the bonds inverted so heavily, we've been in the inverted bond yield environment for a long period of time, over I think 1 year. The statistical advantage for the bonds to be right like increases dramatically after 1 year. So we can pretty much make some assumptions going into the future, which is after pretty much of 1 year or 1.5 years of the bonds being inverted, we could assume that there's going to be a turning point, and we could assume that we're going to go down, and it's just kind of easy to find areas where price would go with targets. And then I just, in my mind, just course correct or like lead the harmonic slowly to the downside around the expected time. So like 42 macro, they expect the recession call Q1 2024 or Q4 2023. So roughly here, they 42 macro expects a recession. And then if we talk about, who's that guy? Jason. Where he pops up a lot. Let's see. Jason Shapiro. He has a forecast for Q4 2024. Mine is Q3 2023. As far as like a bottom, around that area. I think Jason Shapiro, maybe it'll be roughly Q3, Q4. I don't know. It could be maybe Q2. But I think 42 Macro and Jason Shapiro are basically right. So I think 42 Macro nails the soft landing timing, and then Jason Shapiro basically nails the overall bottom of the recession. So that's my thoughts right there. But so this is the speculative forecast of a credit crisis and what it looks like as far as the direction it could go, the market could go. No guarantees, but if I wanted to model something and see what it looked like, that's kind of what it would. That's what I've gotten. And then this is a currency, Euro USD. And I wanted to see if at least like the impulses would match in some way, and they do, and what that would look like. And most of them, if not all, are triple, quadruple phi. So let's go ahead and go there really quick just to like verify, because I think this is a confidence builder with cross-verifying asset classes and what they're doing as comparatively to what the benchmark is doing, which the benchmark is the SP 500. So then go activate one at a time. What am I doing? All right, so we got a quadruple phi. Looks like we had a pullback here. We're buying up the lows here, so we'll see if it turns into a swing failure pattern, and then it makes a final lunge going into end of July. We'll see. And then next we got a triple phi here, and then triple phi there, and then triple phi there, and that makes that broadening wedge style pattern, and that's kind of what we're expecting for Euro USD. And we'll see if it happens. Like as far as like the overall main channel of the price, for a harmonic to get rejected where it does here, it makes sense. Like there's this trend line that looks like it's been respected, and it looks like it could get respected here, and it happens to be right after a breakout. And then this low, it's a quarterly close low. It looks like it gets respected on the support on the harmonics here. And that's the confluence I like to see. It also is the yearly open. And to see that the yearly open holds. So that's that makes me confident that I'm on the right track. It might not be 100% correct, but I'm in the ballpark to where it looks good. And it's I don't know, it's worth the bookmark to follow and see how much of it actually comes true. And because of those that confidence in the Euro USD impulse swings, they match up with the time period, approximately with good brackets. Like it follows the SP 500 impulses to the upside downside within a good margin. And then Bitcoin forecast, let's see, I had over here. So this one was the hardest. This green one took me forever because like I was trying to aim for a target near this yearly open in this blue line. It just wasn't clicking in. And I'm like, okay, so if I look for things up and down this area, and I had trouble finding stuff for a higher target. It just wouldn't connect, like triple phi. I couldn't get anything here. I got something really close here, but it didn't want to click into place. Click into place is triple phi, and there's no problems. When there was problems, it would go triple phi to double phi, but the last number was not an appropriate number. It would be a solid number like 1, but not a magic number 3. So that was the problem. So I decided to just really, I'm like, okay, if it's really a credit crisis, let's shoot for below the yearly open, and triple phi presented with a magic number 3, and I went for it. I was like, okay, that's probably it. Credit crisis. This is a real credit crisis right here. So we'll go through the harmonics isolated. Obviously, like, this is speculative and dependent on the previous harmonic, so the statistics become harder and harder if one of these actually fails and is not true. So this is the current harmonic. It's triple phi, and we're targeting 34 grand. It makes sense with the channel we got here as like resistance and a point that it could reject. So we got confidence in the structure and the overall harmonic. And then next we got a bounce to the downside. I do have some naked breakers here that it basically comes into retest, and this is the previous high of the last parabolic run, and it basically almost comes to retest it, and it's triple phi, 861 861 681 681 861 681 681, and then magic number 363. And then the fib spirals also acknowledge. And then here we got triple phi, and that's 681 681 681, and then magic number 3. And I wanted at least this area to get tapped because I got a naked pivot here. This is like a magnet, we could call it those gaps, and definitely goes to the target I wanted, which is like 40 grand or 44 grand. There's like a naked pivot there. Let's see if I can show you guys naked pivots, and then it's stamped. There it is, and then supposedly this is the naked pivot right here. There it is. There's not one for 44 grand, but yeah, there's a naked pivot right there, and that was my target. I'm like, I want to see when this is going to get hit, and based upon the harmonics, it's going to get hit roughly next year, going into its halving. So the halving for Bitcoin, I think, is April 2024. So April 2024, and this puts us at February, March, April. So if anything, I think the halving is actually going to be a fake out based upon the harmonics. So the halving is so close to the credit crisis, and I think that's why it's going to be a fake out. I think it's going to be more and more revealing as we get close to the middle of the year of 2024 what's going to happen. And with it getting close to like February, March, April, April's the halving, June, July is the middle of the year, it'll become really obvious the direction it's going to go. So like this harmonic was like the hardest one. It took me more than one day to find it. But like I had the harmonic sweeping. I had it going here. I was sweeping this area. None of the numbers worked. I wanted to see, okay, well, if it's not down, it's up. And I started to like sweep this area, and it didn't work either. I'm like, where is it at? So I tried all the way down here, and lo and behold, triple phi. There it is, 681, 618, 618, magic number 3. And then look where it hits. It hits right on the support, the main mother trend line. So if there was any, like if it comes true, that's like the spot. Like 800, was it 8? Is that 8 grand Bitcoin? 8 to 6 grand Bitcoin? That's like the dream of, if you're a Bitcoiner and like you really believe in this thing, that is like the dream place to buy, is like below 10 grand. That's like the Hail Mary if you can get one. And I have no idea. I'm guessing around 2034, 2030 to 2034, it's going to just start exploding above its previous all-time high. But, if I could buy 8 grand, which I would like to, if I got all these profits from like trading, I would put it in Bitcoin, and especially 8 grand. And just wait. Like 2024 is not far from 2034 or 2030, and that's all you would need to wait before your money more than doubles. It could be 10x by 2034, but that is another speculation on top of our speculation forecast, which is like the main thing we're trying to prove over time versus like the overall investment thesis of a speculative asset. So there's like levels of speculation, but the thing that we're putting our trust in is the math and triple phi, quadruple phi, and I guess the back testing and the accuracy that comes with that. But those are the 3 asset classes that I've been able to just make some sort of triple phi, quadruple phi. I don't think there was a whole lot of quadruple phi harmonic series work to where it made sense in the market structure overall. Like EURUSD, you could see how like it touched the right areas for the overall shape of price, and the same with Bitcoin. It like makes sense with the dates. Like here, we're ending around August on the bottom, like June, July, August, September. I mean, all of the speculative downside forecasts are in roughly Q3, Q4. Roughly, it is Q3 2024. September. So it's just something that I'm excited, because these impulse swings are tradable, and you can make you can get a lot of capital from prop firms trading evaluation accounts, and that's what I'm planning to do. Just get a whole bunch of capital, trade these swings, pass these accounts, the evaluations of these accounts, and be ready for the last swing down in 2024. So I got roughly the finishing up 1 impulse, going into 2 impulses, and so 3 impulses before the downside. So the question is, how many accounts can I get ready through 3 impulses of the market, of the targets, and be able to trade the mother impulse, which is going into mid 2024 to Q3, Q4 2024. So that is like the mother speculation right there. But if we're taking the statistics of just the overall hedging inversion of the bonds and the yield curve, the overall yield curve, and the expected probabilities with the time frame that things happen, and then on top of that, layering on like math harmonics and market structure and for entries and high time frame market structure, the probability increases a lot better for success. And we're going to see how many accounts we can stack up, and then how much we can get ready for that last impulse. So thanks for watching. See you next video.